All right, we're going to go ahead and get started. I want to welcome everybody to our first ever virtual multifamily builders council. We are pleased to welcome Meggan Taylor with RealPage to give us a market update here in a few minutes. I just have a couple quick announcements to get through. Our MFBC golf tournament has been rescheduled for October the 16th at the courses at Waters Creek. The cost to sponsor a hole is $1,500. We're obviously paying attention to all the COVID-related issues, and it's subject to change, but that's the plan right now. All COVID-related protocols will be handled appropriately once we're closer to the date of what is required. The other thing related to COVID-19 is the Dallas Builders Association has done a tremendous job securing personal protective equipment for the industry. If anybody's in need of hand sanitizer in bulk, they have gallon hand sanitizers for sale for $40 a gallon. And soon they'll be in receipt of masks, both surgical and KN95 masks that'll be available for sale. Please feel free to reach out to Misty Barcelone if anybody needs anything related to those items. They've been advocating that the building industry be kept essential. And one of the ways that we've done that is by making sure that we'll follow all the health protocols that are in place. So we appreciate everybody doing the best that they can do to make sure that we get to stay open through all of this craziness. We'll be taking questions at the end of the program. There should be a Q&A function on your Zoom browser. If anybody has any questions, please write them in and we'll try to address as many as we can at the end of the presentation. So with that, I'm going to hand it over to Meggan Taylor with RealPage. Thank you, Meggan.
Thank you, Brian. Hi, everyone. Thanks for joining me today. We're going to look at a DFW market update, as well as a brief national update, just to kind of see where we are and where we're headed. I'm Meggan Taylor. I've been with RealPage about a year, and I'm a market research analyst. I work in our market analyst group. So let's get started. We're going to be doing just a second. Okay, an overview of the U.S. apartment market first, and then we'll talk more about DFW and wrap everything up. Starting with demand, this slide is just to point out that jobs are the key demand driver for rent growth primarily. This slide is through first quarter 2020, so prior to COVID. But the point is to illustrate that jobs are a key rent growth driver. But again, during this negative downturn, we're not necessarily going to be turning people out of apartments. So this time around, we're probably looking more at rent growth softening than occupancy. This is just to illustrate that all the jobs we gained over the past cycle, over the past decade, have been lost in about 3 months. I think this slide was about through mid-June, so probably needs to be updated at this point because the data is changing so quickly. But there have been a lot of job losses that we are expecting to rebound pretty quickly, given that a lot of them were more service industry related. This is again through May. So April obviously saw leisure hospitality impacted quite substantially, along with retail and a lot of education and health services that I think surprised people because a lot of that was elective surgery related. So that's kind of where we saw the biggest losses, and we're starting to see that bounce back as economies are trying to reopen right now. So this is kind of the national view of economic sectors. So leisure and hospitality, again, is a big focal point. The metros that have the largest proportion of leisure and hospitality are, of course, Las Vegas and Orlando, which are sort of in the same boat in terms of job losses. And as we'll see a little later, Dallas is closer to about 12% in the leisure and hospitality sector. So it's not as deeply impacted. It has, I guess, a better mix of less impacted sectors, which we're going to see coming up. But this is just to show you at a national level, kind of the markets that are really feeling the hit right now. And then, of course, markets with high concentration of government and education jobs are probably going to be a little bit more resilient. Oil prices, I'm not going to get into this very deeply. Just to mention, though, obviously the oil prices in the energy sector are complicating the COVID and pandemic economic response. This was through, I think, mid-June. I think today it's still around $40 a barrel. Don't quote me on that, but it's certainly been adding to the struggle, as it were. So along with the difficulties of stay-in-place orders and just, I guess, the general health scare, we're seeing that a lot of the lease-up properties are where there's been some struggle. They're not leasing up as quickly as they might have, particularly in, the more, generally the second and third quarters are the prime leasing season. So timing wise, having stay-at-home orders has slowed the lease up down quite a bit, but they will lease up. We're still seeing, we're seeing weekly traffic pick up. We're seeing interest pick up. I think people are ready to move on and make plans. So Dallas-Fort Worth is one of the leaders in lease-up properties, number of units, but we're also one of the leaders in job growth. So, so really it works out. Looking at U.S. rents, or rents on the U.S. level, blue is the forecast. So we're kind of seeing just across the board, I think we're seeing nationwide that we're going to see the most weakness in probably early to mid 2021 and start rebounding at that point. We're seeing that for most of the markets. We're seeing that for Dallas-Fort Worth. This is kind of where we are, our house view on when things should bottom out early to mid 21 and then start rebounding at that point, both rent and occupancy wise. And different markets will behave a little differently, especially depending on their economic demand drivers. They're not all going to behave this way, but for the most part, this is kind of what we're seeing. All right, new lease rent growth. We were seeing, this was in April, okay? So starting to feel the effects of COVID, not quite really. This is annual growth, so that's a thing to consider. So we were still okay in April, around 3% overall. And then in May, we started feeling the effects, particularly in Class A units, which have more pressure from new supply, of course. Class C units are still showing the best rent growth nationwide and in DFW. And B is kind of hanging on in the middle somewhere. Looking at occupancy at the US level, it is starting to soften. Again, we're expecting that trough, and then it should pick back up. And like I mentioned, I don't think we're seeing occupancy behave the same way it did in the Great Recession because of the nature of this particular situation. It's more of a healthcare crisis or driven by a healthcare crisis than driven by structural economic, I guess, downturn, for lack of a better word. So a lot of people are staying at home. So if we're looking at occupancy, people are staying in place. They're not really moving around. They're afraid to get out of their houses. So it's not going to be like it was before, particularly in terms of occupancy. This was through May. So we've still got pretty strong occupancy here, right? So like 94, 95, 96%. It is down from Q1, and it's not as high as it normally might be in the second quarter, but it's still holding on pretty strongly, particularly in terms of when you look at the number of job losses. Resident retention, I just kind of wanted to, again, just reinforce that idea that occupancy will not, we don't expect that it will suffer as much as it may have in the past. We're expecting resident retention to just stay really high and or increase potentially. That could change, and that's certainly market related probably, but retention should, we're expecting, stay pretty resilient. All right, looking at US supply, we're seeing a lot of building right now. It's definitely at a high point, but it's going to slow going forward. We're also expecting it might slow more than we're forecasting based on construction delays, what have you. We're still gathering information on that. That's kind of one of those data points that changes all the time. So far, we are seeing some slowing, but as of the end of first quarter, this was our forecast. So there is a lot of under construction, but it's going to it should ease out pretty soon. Looking at the metros with the most construction, this is kind of an interesting map, I think. Dallas-Fort Worth has the most, DC, a lot of the coastal cities, a lot of the Southeast US. We've got Dallas, Austin, and Houston. We've got 3 of our cities that are kind of in this top grouping here, and as well on the East Coast. I'll go ahead and move on to DFW now. Since January 2010, we've added, I don't know, close to 870,000 jobs. So the point of this, this was pre-COVID, but we're coming into this pandemic in a better place than a lot of other markets are. We've got a really good economy where we've got a lot of jobs, which create a lot of new household formation, which creates strong demand for both single family homes and for apartments. We'll look at a population growth in a minute. The population growth in DFW has been the nation's strongest over the past year, and that will likely slow down due to COVID and people not moving around as much. But after things stabilize, DFW should still be in a great position just based on its economic base. So let's look at this. What we've got here at DFW is a large segment of professional business services. This donut chart sort of compares DFW, which is the outer ring, to the US, which is the inner ring. So you can see we've got a much larger percentage of professional and business services, 17%, financial activities, and trade, transportation, and utilities compared to the US. And then our leisure and hospitality is a smaller segment. So that proves beneficial for keeping us stabilized throughout this event. In terms of growth, here's kind of a look at sector growth. And this was through May, okay? So, so these are the jobs we still have through May since the beginning of 2010. So professional business services, it's grown like 40%, trade, transportation, utilities, almost 24%, financial activities, again, close to 40%. So these are great industries that generally have pretty good median incomes, pretty high paying industries. So we've got a pretty diverse mix of industries here. If you look towards the bottom, our leisure and hospitality jobs, again, through May, were almost flat with where they were 10 years ago, but that's expected to rebound as we open back up and get those jobs back. The information sector has been slowly shrinking for a while, so that's not new. But again, it's a pretty small sector to begin with. Okay, so home prices have been steadily going up. They've gone up actually quickly over the last decade. And it's good to keep in mind that strong single-family housing and multifamily housing together point to an overall strong housing demand in DFW. The rise in home prices will keep renter demand strong because people can't afford to get into those single-family homes as easily. So home ownership right now is about 62%. But it falls into the US average of about 65%. And again, that kind of points to strong renter demand here. It's a map showing population growth. Over the past year, we led the nation again in population growth. Around 117,000 folks moved here. Phoenix, number 2. Actually, if you look at this map, Texas has 4 of these. Again, this is over the past year. And this will, subside going forward just based on what we're going through right now in 2020, 2020, 2021. Excuse me. But Dallas-Fort Worth, again, is just really well positioned based on its job growth and its population growth. Let's take a quick look at rents. Right now in Dallas, we're at about 0.6% compared to the US average, which has gone negative to just 0.2%. So both of those are relatively flat, but they will keep going down. As we talked about, we're expecting it to continue going down a bit more. I think for DFW, we're looking at maybe more of a trough at maybe 1.5%, 1.6, somewhere between 1.5% and 2% annual rent growth by early to mid 2021 is what we're forecasting right now. That could change, but that's, I believe, that where we are currently. And again, this chart just kind of shows that we sort of fall along the same path as the national norm for rent growth. This is a quick just sort of overview on the suburban versus urban core markets. For this slide, I literally just ranked all the DFW neighborhoods, Dallas and Fort Worth. And for the second quarter, who had the highest rent change or rent growth and who had the lowest. So this is a top 10, bottom 10. And as we can see, the top 10 are these more, I guess, rural areas, less density, less population density, a lot less supply as well. They're still seeing some positive rent change. And a lot of our more urban core neighborhoods or neighborhoods where there's been more supply recently, we're seeing some rent decreases, which makes sense. So again, in-town Fort Worth, in-town Dallas are on that bottom 10 list. And I think going forward, we're anticipating suburban performance to maybe hold up as people are looking for less density. whether from healthcare concerns or political concerns or just financially. And I think also being able to work remotely or work from home has opened up the possibility for people to look at different areas, and maybe they don't have to live as close to work as they once had to. So rent change in DFW, we're seeing more weakness in the Class A product, just like we did at the national level. Class B somewhere in the middle, and Class C is still performing better. Right now, our rent across the Metroplex is about $1,184, which is still lower than the US average of $1,400. So we're a more affordable market, which again draws people. DFW is also lower than the averages for the South region, which is closer to $1,200 or $1.31 a square foot. So we're at $1,184. The South region average is about $1,200. So we're still really an affordable rental market. So urban core performance is kind of interesting to look at. This is in-town Dallas performance versus the Dallas metro. So we could see in-town Dallas, just probably based on supply pressure alone, has tended to underperform what we see in the Dallas metro as a whole. And you can kind of see in, I guess, early to mid 2012, which is around the time when under construction really ramped up, especially in Uptown. It went from like 1,000 to 2,000 units delivered annually to boom, 3,000. So it's kind of been pretty aggressive down in that area since then. And I think that's kind of where we could see the split for in-town Dallas, just not performing at the same level as Dallas Metro. All right, so looking at Dallas occupancy compared to the US average, we tend to trail the US average, which is interesting, particularly because actually a lot of markets do. Okay, so we tend to trail the US average because we are a low barrier to entry market. So we get a lot of new supply. So some similar markets are maybe the Southwest and Southeast. And all of these markets tend to have occupancy below the US norm because it's just really easy to build. I mean, there's a lot of space. You can build in a field somewhere. There's a lot of in-town space. There's a lot more availability than there might be in some other markets. So our occupancy does tend to trail the US a bit, and that's normal for DFW. So our occupancy right now is still looking pretty good. This is through second quarter. So Class A is 93.4, Class B is somewhere in the middle again, Class C is 95%. So it's still looking really good, particularly considering everything going on. I know that the CARES Act is something a lot of people are discussing, and I don't know that anyone really knows how that will affect occupancy going forward. But we're expecting, the rent payments have been good so far. People are paying rent, occupancy is still good. So, we're not seeing any, while the CARES Act expiring is a potential headwind, it's just, we're still expecting occupancy to stay pretty resilient. So this is a Metro Dallas. We'll have Fort Worth in a second here, but this is just kind of our expectations for, I averaged our occupancy and rent growth for 2020 versus 2021. So this is just kind of a high level comparison. So we see occupancy from 2020 to 2021 not dropping all that much. The rent change will drop. We're expecting that kind of in most markets. But again, this is an average for the year, so it will drop, but not, it won't completely, just the bottom will fall out. This is sort of what we're expecting right now. So again, that occupancy will probably perform a little better than rent growth, at least right now. Fort Worth, still expecting occupancy to stay pretty strong, maybe tick up a little bit, or at least remain flat, 2020 to 2021. Rent growth, again, seeing a little bit of more of a downturn early to mid 2021, picking back up towards the end of the year, but not a huge spread right there. Okay, DFW Supply, let's look at this. Right now, we've got supply kind of all over the place, which is great. It's really spread out. Frisco kind of has the greatest share of metro construction right now, followed by in-town Dallas. And as you can just kind of look down this list here, it's sort of spread out all over the place. The map is just kind of a high-level view of like current under construction projects, just to kind of, again, illustrate that we've really spread out from the urban core into more suburban markets, which is a great thing. That'll help performance, and that'll help, just keep our performance more resilient, particularly over the next year or so. Under construction, this is a map. So we've got the most under construction. LA has a lot under construction. DC, Houston still has a lot. So Dallas, Austin, Houston, we've got a lot under construction here in Texas. But Dallas has done a good job of absorbing its deliveries over the past decade. So while it might slow a little bit, it's still, we're expecting things to pick back up relatively soon. All right, annual completions. So we're kind of, let's see. The long-term average is closer to 12,000 units. So since we're at about 21,600 right now, we're kind of peaking. We're really peaking. We're kind of at a 20-year peak almost, or at least sometime this year. Again, this is where just sort of unforeseen construction delays could impact this rate of completions delivering. But looking forward, even without delays, we're still expecting completions to come back down pretty soon. So, and then, a lot of projects aren't getting picked up that maybe were planned. So this is sort of in flux, but we're sort of seeing a peak right now, and then we're expecting more of a moderation. This is just a high level. We've literally delivered almost 174,000 units over the past 10 years, which is pretty remarkable. And we've absorbed them. And again, just kind of a testament to the strength of our economy. This is sort of just right now compared to last year. I think this is through May, so we could probably update this pretty soon here. We just keep getting more and more information. But again, just kind of showing that it's spread out, and that's a good thing. That's a good thing for the area. We're also seeing a lot of backfill in urban neighborhoods like East Dallas. We're seeing more construction in Louisville, Rockwall, sort of all over DFW. So that's a really positive thing. All right, now we're getting to some key takeaways. Again, the strong occupancy in early 2020 provides some cushion for the downturn that's underway. We're sort of hitting this downturn at a really high level. So the the negative impact won't hurt us as much as maybe some other markets that weren't performing at such a high level. And again, it's so far so good in terms of apartment residents making payments. RealPage has a weekly payment tracker that we also share with the NMHC. And we're seeing payments really keep up, probably better than expected. Not sure how the CARES Act is going to impact that, but so far so good. And again, while demand this year will trail last year's tally, there are still residents up for grabs. There's still weekly website traffic. I think a lot of people are learning how to lease differently or show homes differently, or just the course of everyday business has changed a little bit, but there's still consumer demand there. And as we saw, the executed prices for new leases are down. We're seeing a rental growth, annual rent growth slow down. And right now, Class C properties seem likely to be some of the better performers, really just based on affordability right now. We're also looking at suburban Class A product. It is so far in comparatively good shape. Like we saw on that previous chart, that the top 10 performers in terms of annual rent growth were suburban. So that trend will likely continue. And in terms of our newer Class A and or urban core properties, lease-up progress will be slow, but it will happen, especially as things start to, I guess, return to new normal, as it were. Wanted to share with everyone that RealPage has these resources. If you weren't aware of them, we have a great COVID-19 webpage you could see here that has lots of information for owners, operators, builders, a lot of different target groups. It's really informative. It's updated as we get information. So that's a good resource to refer to. Weekly webcasts, we have those on a variety of topics, from not only like market updates to, other themes. We also have a blog that a lot of our different analysts and management team contribute to really frequently to keep people just up to date on what we're seeing, what's happening in the market, that type of a thing. So these are great resources to check out if you're interested. All right, so I guess I've kind of gone through the national and DFW overview. I'd be happy to take any questions here if anyone has submitted anything, or go into anything in more depth if I can.
This is Brian. I do not have any questions yet. If anybody has any questions they want to ask, please submit them under the Q&A portion of the Zoom window down below. So I'll leave like a minute to see if anybody wants to submit any questions, or we can adjourn. One question that just came in: are you seeing any trends of people moving from the inner city to the suburban areas?
We are, it's implicit, I would say, in terms of the rent growth performing that strongly in the suburban areas. In terms of actual like population migration metrics, I don't think we have that yet. It's something that we're sort of implicitly seeing based on rent performance. But to what extent that's happening, it's not really sure at this point. I think right now a lot of people are really kind of staying put, and that we might see that happen a little bit more as their leases come up for renewal, or as things change over the summer. But for suburban rental to be doing well versus particularly worse versus urban core in town, I think we're seeing that trend.
Another question related to how you put how the forecasts are put together. What level of certainty are the 2020 forecasts related to the rebound?
Our forecasts, we have a really complex and thorough methodology. We spend a lot of time on our forecasts. We utilize Moody's Analytics, Oxford Economics, and a few other third-party providers, as well as our own team of analysts and market experts to look at each market separately, the U.S. as a whole. We also forecast submarkets for each market. So in the sense that it's a forecast, there's never going to be 100% certainty, but I think like what we know so far, what we're looking at, what we're seeing is proven out by, it's sort of bottoming in, mid 2021 and then starting to come back up. That's what we're seeing kind of across the board right now. Again, it's different per market. Again, that could change. We forecast quarterly. We actually did a mid-quarter forecast. When did we do that? April, end of March, early April, just based on COVID, just changing everything. So our forecast was, dated really quickly. Kind of a long answer, but we're pretty confident in it based on what we know right now. I mean, things could change, conditions could change, but we look at a lot of different factors. We also use an artificial intelligence program called Eureka that uses machine learning to help forecast. So there's a lot of factors involved.
Looks like we got one last question. Do you anticipate renters moving from apartments to single family?
We're watching that. I think again, it's a little hard to say because people aren't moving right now. But again, with rates being so low, it's a good time to buy a house if you were interested in doing that. But then there's, just people aren't moving around. There's, healthcare fears, political fears. This is an election year. So people aren't making big decisions like that necessarily right now. But so far, home prices have really remained resilient. I haven't looked, I think I just saw a few days ago, like they're still holding up in DFW. So the interest is still there. So I think we're going to see that. Again, like people, like the leases are just starting to come up. So we'll kind of have to see over the next few months what actions people take instead of renewing. But right now, renewals are still really strong. So based on that, we're probably not seeing a lot of renters leaving their apartments right now. But again, that could change over the course of the next year or even early into next year.
Wanted to thank everybody for being on this webinar. Wanted to thank Meggan for her information. One question that did pop up was if this is being recorded. Yes, it's being recorded. It'll be posted on the Dallas Builders Association social media pages. So we can follow up on that in the future if you want to have a discussion with your company or anybody else. I want to appreciate everybody for being on the webinar, and thank you guys so much. And I look forward to seeing you soon. Once again, the Dallas Multifamily Builders Council golf tournament will be in October at the golf club at Waters Creek, and $1,500 a hole. Get your sponsorships in. If you have any questions, please contact Misty Barcelone. And once again, PPE, hand sanitizers, or masks. If anybody needs any, the Dallas Builders Association is here for you. So I want to thank Misty and the Dallas Builders Association for hosting our virtual presentation, and want to wish everybody a wonderful day. So thank you guys very much.
Thank you.